Está con nosotros Edward Prasad, es profesor de la Universidad Cornell y exjefe de la división de China del Fondo Monetario Internacional y miembro del Brooking Institute y autor de Doom Loop, Why the World Economic Order is Spiraling into Disorder. Thank you very much for having this time with us, Edward.
Thank you very much for having me on.
Good morning. What is the trade agreements between US and China that could be the complicated situation in the short period in this 2026?
The reality is that we've seen a small de-escalation of the tensions, but the reality is that these are two very large economies with very different objectives, and they see the trade relationship in a completely different way. So I suspect that the tensions are going to keep boiling over. Now, it's not in the interest of either economy to continue these tensions, because the US is doing relatively well, but it's going to find it very difficult to completely decouple from China. China, on the other hand, is very reliant on exports because its growth model has become increasingly unbalanced, so it really needs exports. And of course, the real fight between these two countries, I think, is not so much about trade as it is about technology. Both the US and China are really competing to dominate the high technology sectors, and China seems to be doing well in certain sectors like batteries, solar panels, electric vehicles, and so on. And this is an area where the US has a competitive advantage in terms of innovation. So I think on that front, we're going to see a lot of tensions continue. And this is, I think, not ideal for either economy or for the world economy.
We are seeing the change of era. Is China the potential new leader?
That's an interesting question. Certainly, it looked like China might overtake the US in terms of GDP, but that now seems a little less likely, at least in the foreseeable future, because the US economy has picked up in terms of both productivity growth and output growth. The Chinese economy's growth is clearly slowing down from its red-hot growth rates of the past 2 or 3 decades. I think in addition to the question of which economy has the larger GDP, the bigger question, which I address in my book actually, is whether to think about either economy having more influence over the rest of the world. And here it's a very mixed picture, because the United States is clearly putting American interests first right now in a very specific way under Trump, and the rest of the world no longer sees the US as a trustworthy partner. At the same time, China is not seen as a very reliable partner either, although many countries in Asia, Latin America, Africa are going deeper into China's embrace, but there is a sense that they don't want to get too close to China, because any money or any economic relationship with China comes with some, unwritten conditions. So I think this is the real question, and we have to see how it plays out, because the US is withdrawing from influence in certain regions, but do other countries really trust China? It's not obvious.
Estamos escuchando la apertura del mercado aquí en Wall Street. Estamos escuchando la apertura de un mercado que queda un minuto para abrir, muy calmado, ¿no? Entiéndanme, muy conteniendo la respiración ante la reunión de la Reserva Federal. Ahí escuchan la campana de apertura del mercado, ahí escuchan el movimiento de apertura. Tienen aquí, lo van a ver mejor, en esa pantalla principal del índice. Ellos están, a ver si me ven, ahí, en esta parte de ahí, justo entre estas dos pantallas. Están el equipo de Magnum, que está poniendo ese movimiento de inicio de sesión aquí en Wall Street. Lo están viendo ahí atrás, es la fotografía que vamos viendo, donde también les cuento que el movimiento del mercado, una vez que se ha abierto bueno, es prácticamente igual como se esperaba, 0,02, 0,04, 0,02, el movimiento de caída, y el Dow un poquito arriba, 0,02 también en positivo. Estamos conversando con Edward Prasad. Edward, what about Japan in this scenario? When 19 December they need to hike interest rates, and could be a problem for United States, a problem for debt here in United States that is coming back to Japan.
Certainly there are two perspectives on Japan. One is the long-term perspective. Japan is still a very rich country, but it's really lost growth momentum because, they have a very high level of domestic debt. The demographics are not working in their favor, and the economy does seem to have lost some degree of dynamism. Now, in terms of the short run, you're right that it's likely that the Bank of Japan will start looking to hike interest rates because the inflation rate is getting close to target. And potentially, the improved prospects of both Japan and Europe, with the European Central Bank suggesting that growth next year might be somewhat better than anticipated, that could mean that we have a small rotation out of the dollar into other major reserve currencies. Now, my view, however, is that the dollar is still going to remain pretty strong because ultimately, if you look at the short-term and medium-term growth prospects, the US has been doing very well relative to every other major advanced economy. So yes, both because of economic reasons and also because of political reasons, the pressure from President Trump, we might see the Fed cutting interest rates both in the meeting today and also into next year. But I think the fundamental strength of the dollar is going to keep it from falling very much, although in the short term, it could certainly take another small decline relative to other major reserve currencies.
And how could affect the Fed decision today for the stock market when we are seeing that maybe the division, this complicated scenario could be the main key, on this meeting?
You're absolutely right. I think the outcome of the meeting seems pretty clear that we will see a 25 basis point cut, but the amount of dissent within the committee and what we hear from different Federal Open Market Committee members about how they see the next couple of meetings is going to be really crucial. And one of the concerns, actually there are two concerns related to the Fed. One is that the data have been very ambiguous, and of course we've missed some data because of the government shutdown. So we don't have a clear reading right now on the state of the labor market, on where exactly inflation is going. But it does look like there is a divergence between the Fed's dual mandates, with the labor market weakening and inflation staying persistently high. The second issue, of course, is what happens to the Fed's independence once the Fed gets a new chair, and also once we see new members being appointed to the Federal Reserve Board. And I think that's the real bigger concern, and this is why I think we've seen long-term rates, staying quite high and in fact going up. Even though there are prospects of the Fed cutting rates, I think there is a real concern that the Fed might put the unemployment part of its mandate, that is making sure that the economy stays strong, ahead of keeping inflation under control.
Thank you very much, Edward Prasad, profesor de la Universidad de Cornell. Good day, good business.
Thank you. It was my pleasure talking to you.